Is it best to trade the major Forex pairs only, or is it best to trade the exotic pairs? It's a question that I get asked quite often, and this week I've got some great examples of why I trade both. Let's get into it more right now. Hey there, Forex traders. Andrew Mitchum here, the Forex Trading Coach, with video and podcast number 536. So as more and more platforms and more brokers offer more currency pairs, the question becomes, should I just focus on the major currency pairs? And there are obvious advantages to that. Pretty much the main ones would be spreads are generally tighter. You generally find there's less gaps, and you generally find there's more people trading it, so the volume, liquidity, etc. is better. Therefore, the moves are generally more flowing, more consistent. It also means if you like trading the shorter time frame charts, or like trading quite often with frequency, you'll find the spread's been so much tighter, means that you can take trades on shorter time frames and more often, and you're not paying massive spreads and need big movements just to get to break even. So there are certainly some advantages to trading just the major pairs. Now, some of the disadvantages would be this. One, it completely limits your options. So to me, as a trader who's looking for a certain couple of patterns, why limit your options? It's like, why limit the markets? This week I've taken trades on the NASDAQ, the S&P, we've taken trades on the JPN 225. So why limit to just the Forex pairs? That's my thought, if the system, the strategy works on other markets as well. Last week you'd have heard me talking about a corn trade that I took. We quite often take metal trades, we take crypto trades. So I don't think you should limit yourself if you find that your strategy works on those other markets. Likewise, the downside with trading and focusing just purely on the major Forex pairs is that you tend to find they pretty much get dominated by the US dollar. So, for instance, the euro, the US, the pound US, the Aussie US, the New Zealand US, the US yen, the US franc, they're all US dominant. And of course, there are other, sort of major pairs as well. But you tend to find that the US and the yen kind of dominate those major pairs. And you can find that from time to time, there will be some quite dull price action. And we've already seen that for parts of this year so far, where you've seen some quite dull price action on some of the major pairs. So moving on to the exotics and the minor pairs, just this week, I've taken trades on the New Zealand Canadian, the New Zealand Singapore, the US South African Rand, the Singapore Yen, and the Franc Singapore Dollar. So I've taken profitable trades on those. Now, my prop firm account, you'd have heard me mention last week, was continuing to go well this week so far. We've still got all of Friday still to go. I'm up 1.9% with 0.25% risk per trade. So for me, if you can average that sort of 1.5% to 2.5% per week on a prop firm with incredibly low drawdown, you only need a few weeks and you pass your next prop firm challenge. So for me, that's why I look at other pairs as well as just the majors, because they give more trading opportunities. Now, one of the things just to add from a practical, realistic point of view, that unless you trade, you probably won't know this, is just be very careful, especially on sell trades on those exotics, because certainly at the close of the day, that 5 to 6 p.m. New York time, the spreads can widen quite a lot. And especially if you're on a sell trade, make sure you know the difference between a bid and ask. Especially on a sell trade, with the spreads widen, it potentially could take out your stop loss at that time if you have a trade open on one of those exotic pairs, when sometimes the spreads can blow out to 15, 20, 30 pips at times at that time of day, at the close of day. So just be mindful of that. It doesn't affect you so much if you're on buy trades, but just be careful if you're on a sell trade and you have trades open at that time of the day. It's another one of the reasons why For me personally, I like to take trades on those exotic pairs on like the 12-hour charts or dailies or weeklies, those longer time frame charts where the stop loss is a bigger distance away. It just protects you from potential widening of spreads. A couple other points. If you've not been on my 1 hour masterclass, I'm going to put a link to that masterclass here so you can jump onto that. I really encourage you to do that. It contains a lot of information. If you've not yet seen my webinar that I held just last week with the prop firm called the 5%ers, really encourage you to do that. And again, I'll put a link to that here as well. Some great tips and information about how to successfully pass prop firm challenges. And if you're out there looking for a really good broker, I can highly recommend Blueberry Markets. I'll put a link to them. They offer the MT4 and the MT5 platform. They offer the majors, of course, the minors, the exotics, the cryptos, the commodities, the indices, the metals, everything that we're out there looking for. So I'll put a link to Blueberry Markets as well. If you're on YouTube, don't forget to like and subscribe and share the video. If you're listening on the podcast, I hope you're enjoying the podcast. If you have any other topics or conversations, trading information you'd like me to help you with, feel free to send me an email, andrew@theforextradingcoach.com. I get them personally myself. I always respond personally, and I will make videos and podcasts just like this one to help you with topics that you need the most help with. I see you this time next week. Bye for now.